our very, very interesting webinar. Let me know whether you have any audio issues, just to everyone could listen me out loud and clear. Just let me know, stick it in the box quickly. Come on, Valentine's. It's okay. Hello, hello. Hello to everyone. Great. So, 27 people up to now, right? Good. So, if for any reason I don't manage to cover your question during the webinar, because as I'm always saying, we have a limitation, unfortunately, please email to webinars@hotforex.com. It's me and Stuart that we're handling that email, so it's me or Stuart that we're going to reply to your request, your question, as soon as possible. The same day, we reply the same day, to be honest. So let's go to our disclaimer warning. This material is provided as a general marketing communication for informational purposes only. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or solicitation for the purpose of purchase or sale of any financial instrument. We make no representation and assume no liability as to the accuracy or completeness of any information provided, and we shall not be held liable for any for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading Forex and CFDs may not be suitable for investors and carries a high degree of risk to your capital. Trading with such products is risky and you may lose all on your investment capital. No, that's me. I have a question though. Andria, hello, is this a beginner level webinar? Yeah, it could be a beginner as well, because I start also, I'm covering the MACD from the very, very beginning, like the introduction, how is it setting up, what signals can it give, and then the part that is quite the next level than the beginners and more slightly more advanced is the part of divergence. So I don't know if you're interested about watching it. However, the first half of the webinar is for beginners, yes, and the second part is for more advanced traders that they are looking for divergence and how they could combine divergence and MACD. So that's me. For those that they're attending to my webinar the first time, I'm not going to say a lot for myself. I will simply say that I'm here. You know very well, Stuart as well. Me and Stuart, we are here to help. We're here to provide our views on the market. We uploading reports every day. So in the reports, even if you don't agree with us, read them, because we are saying how we end up believing in that direction of the asset, on that anticipation of the price action, etc. So we give a good explanation, especially technical one. Stuart is giving fundamentals to use as well. So even if you don't agree with a report that we're writing, read it. It will help you with the fundamental and technical stuff. How do you use MACD to confirm Elliott wave count? Okay, that's a more advanced question. Okay. Okay, actually MACD, I haven't added an Elliott wave example in combination with MACD. However, I strongly believe on the combination of more than one indicators. So there is not a way of how to be used MACD with Elliott wave count. However, in order to give you the confirmation of Elliott wave, they will simply give you the same kind of signal. So if Elliott wave, let's say, confirms you, let's say, bullish signal, and the same indeed MACD either by giving you just a direction, a bullish direction, or the momentum is very, very strong with MACD. That momentum, that upwards momentum, if you see an upwards momentum being strong based on MACD, then you have a confirmation for your Elliott wave count. So consider MACD as a good momentum indicator. So it gives you whether your trend is likely to continue or is likely to converge. So you can combine those two, Elliott wave and MACD. However, let's take it from scratch, okay? So we were gonna cover, as I said, we will briefly see an introduction of how MACD has been created and what is it. How it can be interpreted, the interpretation of MACD, what signals does it give us? How could I identify those signals? That's its structure. Divergence using MACD indicator. Divergence is a very, very, very powerful tool, very powerful signal. However, it's rarely noticed or difficult to be noticed, to be honest. And also see some examples. But if you have any question, or if you have examples and you like me to explain them, let me know. Okay, so let's start. So MACD is an indicator which was developed initially by Gerald Appel in the 1970s. However, if you notice on the MACD here, we have here we have a MACD indicator is combined with a histogram and a line. So that histogram, that bar chart graph, let's say, was later on added by Thomas Asprey in 1986. So as I replied to Andrian before, MACD, why MACD is so powerful? Why beginners, and actually any kind of traders, beginners, intermediate ones, advanced levels traders should use it. I strongly believe that MACD is a very, very powerful indicator. And why is that? Because except from the fact that it's a momentum indicator, which it also is a combination of a trend indicator and momentum indicator. So you can identify the trend, how strong is that trend, the direction of the trend, momentum, and also the duration of the trend in your stock price. So is a combination of a trending indicator but also a momentum oscillator. That's why it is a very commonly used indicator, and that's why we consider we consider it as a very powerful indicator and something that you definitely need to try using. Definitely. So nevertheless, as you can see from the chart, from the example below, a MACD can be fluctuate above and below the zero line, so it doesn't have barriers, limitations. It's just consolidating or fluctuates, let's say, above a zero line that we have. So the behavior of the indicator around the zero area, the crossovers between the line and the histogram is what give us signals, and we're gonna see that in practice. As I said, it's unbounded, so it doesn't give overbought and oversold levels like RSI, let's say, is giving. So let's go to more in depth to understand exactly what I mean. We have already some question. Is stochastic same thing as MACD? No, it's not. And the difference, the big difference that I just mentioned, is that it's unbounded. So in stochastics, we have two levels, three levels, sorry, 0, 80, and 20. Anything over 80 we consider be an overbought territory. Anything less than 20 is oversold territory. So it gives you overbought and oversold levels, something that MACD doesn't give you. MACD gives you other things, give you how strong the direction of the trend, how strong this trend is. I mean, the momentum, is there still a strong momentum upwards, let's say, or it's going to reverse? So it gives you such signals, along, as I said, with the possibility of the trend changing a direction. Is what I summarize in this slide exactly. So as I said, from one hand, it is a trend identification indicator, which is combined by moving average prices of our asset in order to give us, to quantify us, the strength of the trend along with the direction of the trend. From the other hand, is also a momentum identification indicator, simply because using it, we can identify how strong the movement of our price action in the market is, and when our trend might change, might go from upwards to downwards, so we will have a trend reversal. Is MACD very useful for FX day trade? Yes, Forzia. Of course. It's not only for stocks, not only for equities, for bonds. I use it for currency pairs. To be honest, I rarely use it for for stocks. Let's say. I usually have it. If you check my reports, I usually use it for currency pairs, even intraday ones, hourly 4-hour ones. I might change sometimes the settings if I want a very short time frame. If I have a very short time frame chart or a position. How can I save this class? Don't worry about it. It is recorded. And we, as soon as we are done with our webinar, we'll email to you the recording. So you will be able to watch it anytime and as long as you want. It will be in our YouTube channel. Introduction to stochastics. Oh, sorry. Did I miss something? Oh, sorry. I had a typo. You're right. I'm very sorry. Are we going to get the recording? Yes, of course. You're going to get, all of you are going to take the recording for the webinar as soon as we are done. So by 2 o'clock, we'll be done, and marketing team will send it to you by email. However, if you don't receive the email, let us know. Thank you. So for people that might have just a demo account, they are beginners, I just I'd like to explain briefly what momentum is and what exponential moving average is. So momentum is the rapid price over a short time frame. So let's say is the energy, is the power that our trend has. So if we have a very strong energy in our asset, in our let's say in our instrument, so that implies strong momentum. So that will push our asset to have a very steep, sharp, rapid price movement. So the stronger the movement, the stronger the momentum, the stronger the trend is likely to continue its path, let's say. So if we have, let's say, we don't have an energy in our, we don't see any kinds of strong energy in our asset, so we have a very weak momentum. That means that if our price is going upwards, then it's running out of steam. We don't have the power to continue upwards, so it's likely to go downwards or something. We'll see that as well in examples. What do we mean by exponential moving average? There are strictly maths. So is the moving average. It gives the weight to the most recent data. So it's like an average of the value of the price action that we have seen, but using exponential formulas. So we are using exponential. We don't actually use exponential formulas. The MT4 give that to us straightforward. So, however, if we don't choose simple moving average and we are using exponential, is because they are more sensitive to price movements. So remember, if you are intraday trader, it's better, and by meaning intraday, I mean hourly, minutes, etc., not a monthly, weekly, or daily trader. So if you are an intraday trader, scalper or whatever, use exponential moving average. They are more sensitive to the price changes. So, okay, as you can see in the example that I have below, the MACD is an indicator, a trend following momentum indicator, combined by three parts. We have the signal line, which is our red line over there. So that line actually identifies the turns of the asset. We have the histogram, which give us the momentum, if it's weak, if it's strong. So the bigger the bar of the histogram, the strongest the momentum of our asset instrument is. MACD line is not in the MT4 in the MT4 indicator. The MACD indicator is not given because it's not something that we could really need, because we have the signal line. However, the signal line is calculated based on the MACD line. And what I mean by that, if you see the calculation of it, the MACD line is the 12-period exponential moving average minus the 26-period exponential moving average. The signal line, which is our red line, is a 9-period exponential moving average, which is the 9-period exponential moving average of the MACD line. So on the MACD line, we have a very fast, let's say, movement, minus the very slow one, the 26. And then the MT4, the MACD's indicator is calculating the signal line, which is an even smaller, even a faster moving average of the value that it was calculated from the MACD line. So that's why we have the red signal. We are calling that the red line is a signal line, because it's a moving average of the MACD line itself. It smooths, let's say, it's an indication of it smooths the movement of the MACD line and interacts with it to produce a more powerful trading signals. On the other hand, we have MACD histogram. These white lines, which represents the difference between the MACD and the 9-day EMA, which is our signal line. So these features bars, appear either below or above our zero line. So it tells you, as I already said, how much momentum a price movement has. So so all this, the combination of this signal line and this histogram, help us recognize when a trend is gaining strength, when it may be about to run out of steam, and etc. So I don't want to spend time on the calculations on the formulas, because you will not do it manually. It's all implemented in this chart. You don't need to worry about what MACD line is, how the signal line is calculated, how the histogram is calculated. You just need to check your indicator to see the signs that it gives you. So let's moving on. Do we have some questions? Hello from Peru. Hello, Carlos. The configuration of the 3 EMA is always the same. I don't really understand that. 3 EMA, you mean 3 moving average in the chart? In MT4, I don't know for other platforms, in MT4 we only have a single line, the signal line. That signal line is a combination of 3 different exponential moving average, a fast one, a slow one, and the signal one. So this is how the MACD is set up. So yeah, it's always a combination of 3. However, as I will mention later, you can change those EMAs, the settings of the MACD. I don't want. Okay, we'll see that in a moment. Muhammad has a question. This is not correct lines? Default MT4, it presents in a blue and red lines also. No, no, the MT4. Let me check, Muhammad. Thank you for your comment, by the way. Let me. That's. I don't know. Can you see my screen? Yes, you can see it. You see that's default. That's how MT4 is the default settings for MACD. So let me get rid of it and drag and drop it again. So that's MACD. So it gives us by default these three exponential moving average values. And if I just plot it, so it gives us this kind of representation of MACD. You might see, however, in other kind of platforms, not MT4. I have seen some examples online when I Google it. That I have seen that there are also some platforms that give MACD, that except that they are giving the signal line, they are also giving the MACD line, which is, as I said, the fast exponential moving average minus our slow moving average. There are platforms that provide that as well, but not in MT4. If you are using MT4, and MT4 has this setup, only the signal line and the histogram. So let's go back to our webinar. So how do one know the parameters MACD at different time frames? Thomas, we'll see that later on. Don't worry about it. So MACD, how we can interpret MACD? As we said, we have this setup: the central line, which is the 0 level, the signal line, and the histogram. With the histogram, we can identify, based on the height of the histogram in the MT4, we can identify the momentum. So if MACD histogram and the signal line is above 0, what that means is that we have a demand. We have actually demand in the market. If MACD, so that's buying, let's say, some kind of a buying signal. Because as you already know that MACD fluctuates up below and above 0 all the time. So you have to check for this, for such kind of you have to be aware already before using the MACD what each thing means. So if our histogram and signal line is above 0, then that means that we have demand in the market. If MACD histogram and the signal line is below 0, then we have supply mode in the market. That's the one thing. However, what as a traders we have to look for is crossovers, either signal lines crossover, central lines crossover, divergence, which generates a very powerful signal, and any dramatic rise that we might see. So I have splitted all these into examples. So we will start with crossovers. And crossovers are split into two parts, the zero crossover and the signal line crossover. We have some questions. Sorry, I'm stopping. So how? Okay, Thomas, as I said, we'll see the parameters of the MACD in different time frames later on. Muhammad, can we arrange a webinar on volume spread analysis? Which accumulation, distribution? I want to learn the strategy volume spread analysis. That's a very, very good idea. Also known as Wyckoff method. To be honest, I never studied that method, but that's a good idea of webinar. Okay, yeah, sure. I like that. Okay, I'll have it. I will actually put that down as a possible webinar. Nice. Thank you, Mohammed. Oh, everyone, if there is a topic that you want us to cover in a webinar, let us know. We are searching for new ideas in order to understand what you actually want to learn and not repeating the same and the same again and again. Yes, you are right. You're right. Let's because we are spending too much time on the question. I will try to continue with the webinar. We'll see the question later on. Sorry. So, as we said, the first interpretation, we need to check for crossovers. Zero crossover means that is when actually the MACD line crosses that zero level, that zero horizontal axis that we have. So if we see the MACD changing from positive to negative, that's a bearish signal. If we have seen MACD changing from negative to positive, that's a bullish signal. That's about the zero crossing. Now we have something more tricky, is the signal line crossovers. So if we have seen MACD, and by saying MACD, I mean the histogram, that Y chart. If we see MACD falling below our signal line, our red line, that's a bearish signal. So that gives, as you said, as we already mentioned, remember, MACD histogram gives the momentum. So that by falling below the signal line, it simply tells us that downside momentum is increasing. So we have a bearish signal. If MACD turns up and rises above the red line, above the signal line, that's a bullish signal. So we have upside momentum increasing. So as we said, the zero crossovers provide evidence of changing in the direction of the trend, but less confirmation of the momentum than the signal lines. So the signal lines are giving a more indication of momentum, while the zero crosses are giving more evidence of a change in the direction, the actual direction of the trend, either upwards or either downwards. Also, something that you really have to take care of is that as a traders, everyone, as you as well, you have to wait for a confirmation of the cross, either the zero cross or the signal cross. You have to wait to be confirmed before entering into a position, because these are simply indicators. You might enter the market too early. There might be a false alarm because a fundamental thing happened. Someone had a speech from ECB, from FOMC, and everything have changed. So wait for your signal to be confirmed, is what I'm saying in every single webinar. Let's see that in practice. So here I have, hopefully everyone can see it clearly. The red numbers stand for a zero crossover example, and the yellow yellow points over here stand for a zero crossover, while the red one complains for a signal crossover. So let's see over here. Zero, this point, as I'm saying over here, can you see my mouse? Yeah. So this is our zero line over here. So at the first point, first 0 point, we have a change from positive MACD turning into a negative MACD. You see that switch, that turn at this area over here? So that's a bearish signal. That gives that our asset will either continue downwards or has a further or change to a downwards movement. And that's what it did happen. You see, it turned at this area over here, and later on it did happen. It went downwards. That was a bearish signal. At the level 2 is quite a late signal, to be honest. However, if you see, it did later on, it did confirm this signal. It went further down for around, how much does it? $40 down. That's gold. That's gold. So it confirmed this bearish signal later on. The second point is over here, which we have a change on MACD from negative to positive. So that's a bullish signal, which indeed, that's what happened, turned to positive, and we have seen that this confirmed by this sharp upwards movement up to this area over here, $1367 for gold. Now, if we see, let's go to the signal lines crossover. What do we mean by signal lines crossover? So the first point, if we see the histogram, the MACD, falling below the signal line, so at this level over here, this area over here, you can see that our histogram is lower, has crossed below the signal line. So that's bearish signal, a more powerful, let's say, from the zero crossover. So this is more powerful. It signals that bearish momentum on time than that crossover. So it crossed below the signal line at this over here. So we noticed this this signal, this falling below the signal line, and this at this time, at this I don't have, is it September? Yeah, September 13th, I think. That it? Yep, September 13th. So it gives us that bearish signal, saying that momentum, downside momentum is increasing, and that it did happen. You see, it went further down at this area over here. So it gave us many times, many days prior, a bearish signal. So this happened approximately 13th of September 2017, and our gold asset was indeed continuous downwards movement up to 5th of October. Is that 5th of October? So if someone noticed this signal, that would be very profitable for him. So the second part, the second point is when we have the vice versa. So what I mean by vice versa, if we've seen our histogram, our MACD, turning up and rising above the signal line. So you can see the signal line, the red signal line. So we see the histogram crossing above the signal line and moving above it. So that's a bullish signal. So that happened from the beginning, 30th of July, then happened again in August, then happened again in September. So that indeed happened. You can see it from this movement over here, where it reached its peak on what's that, 7th of September, somewhere around there. So strictly, if we see MACD crossing and rising above the signal line, that's a bullish signal, and that's give us upside, that the upside give us the impression that the indication that upside momentum is increasing. Hope that was a good example for you. So let's move on. Shiraz, yes. MACD, no, MACD indicators are also indeed lagging. So that's why you have to modify their settings and find the settings that suits your trading style, let's say. So it depends on the trading style that you're using. So let's see it afterwards. That's again the same example. Hope that everyone could understand it. It's just a bigger picture of it, just for you to see clearly the levels that we discussed earlier. So again, zero line, MACD changed from positive to negative, bearish signal. Over here, from negative it turns to positive. That's bullish signal. The one in red is MACD falling below the signal line. That's a bearish signal again. And over here we have histogram, the MACD rising above signal line. That's a bullish signal. Let's move on. A very, very powerful tool, divergence using MACD. I will firstly explain what divergence is, because I'm not sure if anyone is aware of what divergence is. What we mean by divergence? Divergence is an indication of a possible trend reversal ahead of time. So if I say that in simple terms, is when you have indications, you have signals that the price action of your instrument, the trend, is about to change its direction. So if it goes upwards, then it's going to change downwards to downwards, or if it's going downwards, it's about to change to upwards. So is the before that happened, that's the good with divergence. So you will see that signal, that reversal signal, before actually happens. So that will provide you a sign to enter the market on time, because you had this indication prior, ahead of time. So not the setter sign that market will reverse, or an entry signal. Exactly, it's what I said just now. So it's not an entry signal when you noticed it. You have to confirm it later on, but if you notice divergence, put it down, write it down that you notice divergence on that pair, and every time check it. Did it give any other signs of a change, of reversal? Shall I enter? Is it time to enter? So put it down that, oh, I noticed divergence in that instrument. So it has to be in my watch list in order not to miss the entry signal. Also, divergence put alerts, as I said, in traders that should search for a possible entry in the opposite direction of the trend. Have it divergence in mind, put it in your watch list, and then search for confirmations in order to find out your possible entry in the opposite direction of the trend. Identification. Divergence can be spotted once indicator does not goes along with the price action of the instrument over a period of time. That's why it's a good combination with MACD. So if, let's say, we are using MACD, if your MACD goes in a different direction that the price action of the instrument, of your currency pair, of your stock, or whatever, then that's an indication of divergence. So what you have to do, firstly, you have to identify the direction of the market, the direction of your dollar yen, let's say, or the direction of your euro dollar, and etc. Then you have to identify the direction of your indicator. Where is it moving? Is it moving upwards, downwards? So then to compare those two. If the direction of the market is opposite than the direction of the indicator, then that indicates divergence. Let's see examples. So, okay, before examples. So we have MACD and divergence. We have MACD that presents a 10 trend falling momentum indicator. As we already said, and hopefully everyone understands it and have it in mind, if we see higher highs on MACD, the histogram and signal lines, then is the momentum, the trend momentum rises, increases. If our MACD lines are making lower lows, then it means that the momentum is decreasing. The trend momentum is decreasing. So if we combine divergence and MACD, so if the price of our asset makes higher highs while the MACD lines has lower highs, then we have a bearish divergence. That's a bearish signal. If the price of the asset makes lower lows, then the MACD lines is making lower highs. So that's a strong bullish divergence signal. So that means that price and the oscillator are divergent from each other because they are simply moving in the opposite direction, as we said. So divergence, as you have to take care of it. Don't enter the moment that you identify the divergence. Confirm those signals. So it could either divergence could either warns you for a trend reversal, or for a correction, or a consolidation, or whether your asset is going to get into a consolidation mode. So let's leave the theory behind us and see examples. So the first example that I put on is a bearish divergence. What do we mean by bearish divergence? Bearish divergence means simply that it gives us a bearish signal and that our asset from upwards trend is going to turn downwards. So it's possible to see in the upcoming future and downwards movement. So here I have a loonie example, the dollar CAD, the Canadian dollar against US dollar. So if you check, what we have to check first, we said we have to check the prices. So indeed, my currency making higher highs, right? So price action makes higher highs. However, I have noticed that my MACD is making lower highs. So it is indeed above zero. It is positive, but the histogram and the signal line itself, they are making lower peaks, lower highs. You see that? So we have, if you plot a trend line on, you see that it's getting lower while your price action is getting higher. That's a bearish divergence. So you have to write down on your trading journal and say, oh, I have noticed from this period to this period, from December, let's say, to November. Okay, this is the weekly basis chart. I just wanted to give you a good example. So don't stick on the weekly basis. Diversion can be identified in every time frame. You just have to be very, very careful and notice the signs of divergence. So you have to write down that you notice a divergence between this area, this period. So once you have another confirmation that it is going to another bearish signal, then you could enter the market. So as I said, if you see such signal, it means that your trend is likely to reverse downwards. Also, if you check the histogram makes lower lows as well, right? It's going down, up, down, up, down, down, down. That's another indicator that the upwards movement that we are currently in is running out of steam. So the momentum, the power, the bulls are pushing higher the price, right? The bulls are decreasing. So we have the upwards momentum decreases. So that's another sign of the upwards movement running out of steam. So you have to check the bars as well, because they are decreasing. So it seems that the upwards movement is running out of steam. Also, as we said, another signal is that MACD is below the signal line, and that it did happen in this area over here, or again here, here, and here. So you have noticed that divergence, a very strong one, checked by the price of the action, the indicator, the high of the histogram saying that the momentum is running out of steam, and also the fact that the MACD histogram is falling below the signal line, falling below. So that was a very powerful bearish divergence signals. When shall we enter? Good entry level is when it cross. You see, when it cross from positive goes to negative. So that's a possible entry point. However, if you're waiting for that crossing, you might miss the opportunity. So another good entry is this area that I have put with a yellow line over here. So if you see the break of your immediate support level, that's a signal of entering the market short. So you have seen, if you notice your signal line, so if you're over here, okay, you have already noticed the divergence, okay, but you have noticed that the red line, the signal line, has break this immediate support level over here, and that it did also happen with our price action. So at this area over here, the asset initially, the dollar CAD, was struggling to break it. So it hit 1, 2, 3, 4, 5, 6 times, 7, 9, 8 times, and finally break it upwards. So that resistance became later on our immediate support level, and it did break over at this area over here. So our resistance, which became support, once it broke, it became a support, turned to a support level. It break at this time over here. You have seen it breaking, and you're going down to check your MACD, and what the MACD is saying, oh, my MACD support indeed it break as well. And also the MACD line is below my signal line. So another bearish signal. So I should enter the market at this level over here where my support broke. That's if you manage to see that and enter that time, then you didn't miss the move. That was a good entry point. So let's go to the bullish divergence example. So bullish divergence examples is the opposite. I know there are many questions, guys. I will try to reply to you once we are done. So bullish divergence is the opposite of bearish divergence. So my here I have, by the way, I have an intraday chart. I have a 4-hour chart. So as I said, you can apply MACD in any time frame, longer, shorter terms, the same divergence can be identified in any time frame as well. So bullish divergence, my asset is moving downwards, so I am seeing the price action to make lower lows. So lower lows, lower lows, a big lower low over here, again lower over here. So I'm putting that plot, that line over here to see, to be aware of the move of the trend. However, I have noticed in my indicator that it might be negative because we are in a downtrend. So MACD is negative. However, the signal line and the histogram lines, they are making higher lows. So what that means? It means if you see MACD histograms making making lower lows, that means that the trend momentum decreases. So since we're in a downwards movement, so this downwards momentum is seen running out of steam, is seen decreasing. So that's an indication that bulls are entering into the market and that bears are losing the control of this asset. So this is a bullish divergence signal indicating that the trend is likely to reverse to the upwards. And that's what indeed happened. If you see, you identify this divergence at between 28th of December at 4 o'clock up to 8th of January. You noticed it, but you were waiting for, you put it down to your watch list and you are waiting for another signal to confirm the divergence, to confirm that indeed this dollar cut from downwards is going to change to an upwards. And the signal came later on at between 9th and 10th of January. So after seeing that, after seeing these higher lows, etc., I have put a line on this peak over here, so that will be my resistance level. Indeed, you could place your resistance level in this, above this big candle over here, or maybe a better resistance area should be this area over here, this over here, over here. Why? Because the pair tried to break below this area over here, 1, 2, 3, 4, 5, 6, 7 times, and it break it with this big candle over here. So this was a strong support area, which it break later on around here. So with this big candle over here, so you could enter once you saw this big break in the price action and in the MACD as well. So that would be an entry point, along with the change of histogram from negative to positive. But as I said, sometimes if you're waiting for the zero cross, you're losing the opportunity to enter on time. Okay. Oh, this is something extreme. So this is a situation when you're seeing divergence. You're seeing that, first of all, here we have a S&P 500 chart for our while. So you might see some cases like that. So we have seen the S&P 500 having 4 or 5 times bearish divergence during 2012 between February to March, so making lower highs, but the price was making higher highs. So this, despite that you might notice this bearish divergence, you never had a confirmation of it, because the market continue rising despite these corrections. It continue making higher highs. So always, if you notice divergence, wait for a confirmation of it, because as you can see in that area, in that example over here, you don't have a confirmation because the momentum was so strong. The uptrend actually was so strong that despite this divergence between MACD and price action, the asset, the stock, continued to going upwards. So that's a good example of you to be aware. Wait for another signal. Divergence is ahead of time, so just put it in your watch list. But if you don't confirm that with a break of the support or the resistance level, if you don't confirm with something like that your asset has reversed, then don't enter. Always, as we said with the previous examples, always set support levels and resistance level, and only if they break, then enter the market, okay? So a third interpretation of MACD is when we had a dramatic rise. This is a very, very rare scenario. I'm just let you know, it might help you in the future. So what we mean by a dramatic rise of MACD is when MACD increases or rises very, very dramatically. To be aware, Google example was the only one that I managed to find for such extreme scenario. So what we mean by dramatic increase of MACD is when the short-term moving average pulls away from the longer-term moving average. So that's a signal. It's the only signal that we might have. It's the only signal that we have seen the asset. The MACD gave us an oversold signal. So what I said in the beginning that it doesn't give you oversold and overbought levels. However, if we see a dramatic rise of MACD as over here, so that it did gave us oversold identification. So what I mean by dramatic rise. So as you notice, prior this scenario over here, you can see that MACD was fluctuate between 0, not picking up more than 50 levels. However, on the 18th of May 2014, it went down to minus 141. That's a dramatic rise downwards. So if you see such sharp movement, which is unusual for the asset, you see this is unusual. Before we didn't have so big move downwards. So if you see something like that, you simply need to wait, because this, don't sell, because what it says to you, oh, it's already oversold. It's in extreme levels. The MACD is in extreme high levels, so it's extremely oversold. So it's likely to go back to the normal, to returns back to normal levels. So it's going to get higher and go to more normal levels. The same can happen in an upwards movement. If you see extreme levels, positive levels, then the asset is overbought, so it's likely to return to more to a more normal levels. However, this is a very rare scenario. I'm just putting it down just for you to be aware. You never know. The markets are unpredictable sometimes. So any release of any news that it is very, very unacceptable might cause such extreme scenarios. So why we should use MACD, and what we have to, what things we have to take care about MACD, what's the possible risk when we are using MACD. So the benefits of MACD is it's a very good trend following tool. So it works to detect the trend, but it will not get you quickly into a trend. You have to take care of other signs, such as we said, the MACD crossing below the signal line or above the signal lines. So it is a very good trend, but you have to combine what we said before in order to enter the trend on time. It is useful for identifying fast trend direction, the strength of trend, divergence occurs, and the reversal possibility. However, it cannot provide you, as we said before, support and it doesn't provide you oversold levels or support and resistance levels on the price action. I mean, like ATR gives you an indication of how many pips up can the price action move. What MACD can give you is the possibility of a break of support and resistance level. However, it cannot give you actual indication on where you should put your support and resistance level. You will find it out by the move of the price action in the asset, as we said in the examples. So check again my examples. MACD line helps you hold in your position indeed. So rises in an uptrend and falls in a downtrend. So if the price rises and MACD is also rises, let's hold your position on the upwards. If the price is falling and MACD is falling as well, then hold your position on a short short position. However, if prices rises, okay, yeah, and the opposite, yeah, okay. So if the price is low, it's getting lower, MACD is getting lower as well, then hold your short position. The fact that is one of the indicators that they have two lines, they have the histogram and the signal line, they have two things combined. This gives us more information. We have seen that in practice. So the settings, Thomas asked me before about the settings. By default in MT4, the settings that we have for MACD is 9 period, 12 period, and 26 period. So if you are in a daily chart, that's a 9-day, 12-day, and 26 days. So you can modify these settings, but you have to check them on your trading style, because if you have for many indicators, the higher the time frame is, the more reliable the signal are, but they might be late signals. If you put higher than the default ones, let's say, they might be more reliable, but you might miss the signal because it will be a late signal. If you make the time frame of the settings, if you make the settings of the MACD, let's say, if you reduce them too much, you might have fast signal, but they might be not accurate ones. So you have to test your settings, the testing that you want to apply on your trading style, and also to combine indicators with other indicators or patterns. So regarding MACD settings and what you have to take care of, here I have two daily charts of cable. In this area over here, I reduce my settings to 5, 8, and 3. So lower settings, faster trend detection, but be cautious because they might be fault trends. Actually, in the cable, the 5, 8, and 3 that I use seems to satisfy this time frame quite well, because you see over here the MACD went below signal, so that was a negative bearish signal, and it did happen. It went downwards. So for this asset, it seems that the fact that I reduced the settings was good. While when I kept the default, they did give me a more reliable, let's say, result, but they might also they might also give me the possibility of missing the trend on time. So as you can see over here, the MACD is still, say, positive. However, my trend is getting weaker, it's getting downwards, so I may miss. Check yourself. Try the default. Is the default okay? I will keep the default. If I reduce it, do I have faster signals? Are they correct? Check them, and then check which time frame is better for you, which setting is better for you. To be honest, what I usually use is the default, and when I have a very, very short time frame, such an hourly one, 30 minutes one, I'm using the 5, 8, and 3. But before I'm using it, I'm checking that it did gives me some good signals. Another also type of settings that you can use is the 5, 35, and 5. This is again sensitive, more sensitive than 12, 20, 12, 26, and 9. You can see that. Another setting could be 5, 35, and 5. More sensitive than the 12, 26, and 9, but it might be better for your trading style. It depends, guys, strictly on your trading style. I don't know what kind of traders you are, if you're a daily one, scalpers or not. Use at the beginning the default and check, do the lines give me the correct good signals, or they are giving me delayed signals. If they're giving you delayed signals, then change it. Put it to 5, 35, 5. Check again. Is it suitable? No. Try 5, 8, and 3. Check for yourself based on your time frame. So just a recap. MACD indicator, as we said, it considered be the one of the most powerful indicator because it combined trend direction, trend indicator, and a momentum indicator. So it helps with three things: identify the trend, finding the strength of the trend, and signals the change of the direction. It combined by three parts: zero line, signal line, histogram. We have already said about the different settings that you can use. Make some tests, check which one it suits your trading style better. Also, by changing, don't be afraid of changing your settings, because each one of us, each trade it has a different approach of the market. So if you test a bit, it will improve your trading, because as I said, we have to make tests and find out the best setting possible, because this will improve our trading and not the opposite. It's not a very good tool, as we mentioned in the disadvantage of it. It's not a very good tool for identifying overbought or oversold levels. You can identify overbought and oversold levels only on extreme scenarios, like the Google example that we saw earlier. Last but not least, a very, very powerful combination of tools, and when we identify divergence with MACD. So if something like that is noticed, put it down and put the asset in your watching list and wait for another signal, a break of support or a break of resistance level. So be aware that in a divergence, the higher the time frame, the more reliable the reversal. The higher the time frame, the more reliable is. But you might miss the reversal might take longer to be confirmed. So be patient with divergence. So it's time for questions, and we have a lot, I think. Hopefully everyone is here. So so Shiraz, and I understand indicators like MACD are lagging. In this case, the signal was very late. Yes, indeed, I had a missed. It was in my which one was it? Yeah, I think the first sign. I see here. This example over here, there was a missed, was a late signal. So what you had to do before applying your MACD is, for gold, let's say, for this time frame, you had to reduce the settings lower, check whether it gives you correct signals, and then finding the appropriate settings and leave it on your chart. So that's why we have to check the settings. The settings have to give us correct signals. Always check your settings. The MACD you can use for trade in hourly or daily, any time frame. Just change the settings. Check. You might not actually change the settings. You may leave the default ones. Just check them, as we already said. So, Shiraz, again, when drawing the divergence line, how many points should we connect as a minimum? So, divergence line. Okay, let's go back to divergence then. Do you prefer bearish divergence? So when drawing the divergence line, how many points should we connect as a minimum? If we connect to MACD high for divergence, we would have lost money as the price went up since then before dropping later. So, okay, as I understand what Shiraz is saying. So Shiraz, if I'm not wrong, correct me if I'm wrong, if you enter here the price drop afterwards, how to avoid such scenarios? What? So I understand what. So I understand that. Okay, what Shiraz is actually asking is that, okay, I'm seeing that my asset is doing some higher highs, let's say, and I'm putting my okay, and I put in my lines in order to confirm that this is a divergence. But if I enter, let's say that Shiraz identify these higher highs over here, and it put that on. It put this line on, and he entered he entered the market long, because he saw that at this area over here and this area over here, my price action was higher high while my MACD was lower low. So he entered long without, he entered short, sorry, because a bearish divergence. So he noticed these higher highs over here, he noticed these lower lows over here, and he entered long. However, the price continued upwards and he lost all his money. How you avoid such scenarios? The reply is simple, Shiraz. That's why we said that you need to wait. Divergence is always ahead of time. So you have to wait for a broken support. So despite the fact a broken support, be aware, not resistance, not entering the market short. Broken support in a bearish diversion, you have to have a broken support to enter the market. So I have noticed that it makes higher highs, and I'm waiting for my support to be broken. So if you entered the market in this area over here, let's say, if you identify the divergence over here, so then support should be here, right? Am I right? Yes, the support. Did you just reply? I'm not sure. Yeah. So if you saw these higher highs and these lower lows, your immediate support is in this area over here, which never braked. You see, never braked. It continued upwards. It continued upwards, and even if it touched the support area at this level over here, this is your support. Resistance becomes support. This resistance over here, it was your support. It touched it, but it didn't break down. It didn't break it lower. So there wasn't a confirmation of a broken support. That's why you had to wait. You notice the divergence. Okay, I notice it. It continues upwards. Okay. Then, oh, what's going on? That's a big down candle. So let me draw my next support. My next support is over here, because over here my asset was struggling to go above that. It hit it 1, 2, 3, 4, 5, 6, 7, 8 times, and it was struggling to break it. Is my MACD agrees with that? Where is at this level over here? It has also a support level. Yes, it has. It had this area over here, which is touch it, but it went upwards again. So I put also this line over here, and I'm waiting for my price asset. He makes many bearish candles, but I'm waiting until I see this broke of the support. So when I see a broke of my support in the price action, and indeed I had seen the same time, if you put a vertical line over here, you see it happened the same time, and I did see that the signal line and the histogram broke my support line in the MACD as well. I will enter short. So always wait for put lines, put your immediate so this is a very good example actually, because you have seen a very, while it was upwards and making some strong bullish candles, it immediately this week it make a very big draft lower. Oh, I have a very big bearish candle. I have to wait. I have to draw my support line and wait to see whether it is broken. If you put that line and you are watching it day after day, hour after hour, depends on your time frame. If you are a scalper, and you are in an hourly chart, put the line and put a command. If you are not able to check the markets all day long, put a command. So it's saying, put in the MT4 and saying that if a dollar CAD breaks below 133.44, then short position with target in the next support area, which was here. Because, okay, we are people, we cannot watch the markets all day long. We might go for work, we might go out. So in cases like that, it's good to put pending positions. So putting these indications, if dollar CAD breaks below 133.40, enter short with this target and this stop loss. Okay, so hopefully that was that replied to your question, Shazar. Thomas, I like 4 hourly and daily time frames. Good. So you could use the default settings are usually good enough, or the 535.5. What indicator you prefer to use with MACD and what you recommend? Okay, what I recommend is, okay, I always, as you can see in my chart, I always like having the 50, the 200 moving averages always in my charts, and the 50 moving average always in my chart. But because MACD is not giving you overbought and oversold levels, it's good to combine it with RSI, sorry. So RSI is one of the, or stochastics. Stochastic and RSI give you when it is overbought and oversold. So it's a good combination with MACD. So yeah, that was, I recommend moving averages on your charts, because let's see something before we end up this session. It seems that I don't have I don't have an example of it. Okay, so as I said, RSI is a good combination or stochastic with MACD, because it gives us an indication of the overbought and oversold levels. And also it's good to have 200 period moving average and 50 period moving average in your charts. Which one is faster between 535 and 583 settings? 583 is way faster. Be very, very careful with it. Don't use it in high time frames. Use it in a very, very short time frames, even 30 minutes one. Check it before you use it. Check that in this, give you correct examples. However, if you are in a 4 hour chart, try 535. It might suit your chart quite good. However, yes, both of them, no wonder, is they are mainly intraday settings. However, sometimes I notice that for some assets, 535.5 is also, despite that it's quite sensible, is quite good for daily and weekly. But I don't think you guys are weekly traders. Some of you might be weekly traders and don't want to risk too much, want to be in the safe side. Up to you. So hopefully we run out of time. We have covered this webinar in an hour and 20 minutes. So thank you very much for watching. If there is something else that you need to clarify for this webinar, please email to me at webinars@hotforex.com. Also, check our new products. We have HF Copy, a very, very powerful product. It has just launched in Hot Forex. Is following is following some people that are trading for you and choosing the trades that you want to follow for. And also premium trader tools are tools that can be modified, that can be downloaded for free in MT4. Very powerful product as well. Have a look in our website and check out them. Thank you very much for watching, and hopefully I will see you all of you again in 24th. Is it when? Oh, I have another webinar. I don't know why it's not in this list. In the 21st. 20th and 21st is Stuart, but I have another one at the end of February as well. Hope you joined the webinar. Have a great trading day and see you all again. Bye-bye.